If you are a W-2 employee working overtime, the IRS is letting you claim some or possibly all of your overtime pay tax-free. It's set to last from 2025 through 2028 unless Congress decides to extend it. This is a federal income tax deduction, not an exemption from all taxes. Your overtime is still subject to Social Security, Medicare, and state taxes. Taxes, including federal, are still withheld from your paycheck as normal. You'll claim this deduction when you file your 2025 return in early 2026 and all your other federal tax returns through 2028. Now, I'm not about to give you tax or legal advice. I'm just going to explain who qualifies, the specific income limits, and the simple math you need to calculate your deduction. Please consult your own advisor for your specific situation. To claim the no tax on overtime deduction, you have to make sure you tick all the eligibility boxes. Let's run down the list quickly. 1. Valid Social Security number. 2. Filing status. You cannot be married filing separately. Any other filing status is generally fine. 3. W-2 employee. 4. Hourly non-exempt. The benefit is aimed at hourly non-exempt employees. If you are an exempt salaried employee, you typically won't qualify because 5. Premium overtime required. You must have received overtime earnings that were paid at a higher rate than your regular wages. 6. Federal standards. Your overtime must meet federal labor standards. That's generally at least time and a half for hours worked beyond 40 in a work week. If you meet those 6 criteria, you should be able to take the deduction. Now, let's talk about how much you can actually deduct. The maximum deduction is $12,500 of qualified overtime pay each year. If you're married and filing jointly, that doubles to $25,000 if your spouse has overtime too. But the deduction only applies to the premium portion of your overtime. If you're paid time and a half, which is 1.5, only that extra half or 0.5 qualifies. For example, if you make $30 an hour normally and your overtime rate is $45, you can only deduct the $15 premium. The initial $30 is still taxed. Also, straight time bonuses, tips, and hazard pay that aren't calculated as a true overtime premium do not qualify for this deduction. While this is a huge win for middle income workers, the benefit does phase out for higher earners. The deduction begins to shrink if your modified adjusted gross income is above $150,000 for single filers or $300,000 for joint filers. For every $1,000 you earn over that modified adjusted gross income limit, the deduction is reduced by $100. You will report this deduction on a new form called Schedule 1A for Form 1040. A little later, I'll show you how to calculate your deductible overtime amount, especially if your pay statement or W-2 doesn't break it out clearly. The IRS will require employers to start separating out your qualified overtime pay on your Form W-2 starting in tax year 2026. However, for 2025, since this law went into effect mid-year, the IRS has granted penalty relief to employers. That means your employer is not required to give you a clear, dedicated box for this specific deduction on your W-2 for 2025. So where might you find the overtime amount that you need for the deduction? It could be hidden in a few different places. Some proactive employers might report it in Box 14 called Other on your W-2. Others might include it on a separate year-end earnings statement or a special report. But unfortunately, many employers won't provide separate information for the amount at all. If your employer does provide a clear breakdown, great, use that number for your deduction. Also, there's a 1-year safe harbor policy for employers, allowing them to calculate based on the second half of the year. But since employers are allowed to opt out, you need to be prepared to calculate it yourself. The IRS is allowing you to use a reasonable method for calculating your deduction. You'll just need your pay statements, payroll records, or other documentation. Remember, no matter how generous your employer is, whether they pay time and a half, double time, or some special holiday rate, the IRS only allows you to deduct the legally required premium, which is the extra half or 0.5 in time and a half pay. Again, if your normal rate is $30 an hour and you're paid double time at $60 an hour, the deductible portion is still only $15 per hour. That's the halftime premium. Now, if you receive time and a half and your pay statement already has a line item that shows only the 0.5 extra halftime pay above your regular rate, you can use that listed amount for your deduction. If your pay statement shows a single combined lump sum for overtime, meaning it includes your regular pay plus the halftime premium, you will take the total combined overtime amount and divide it by 3. For example, if your year-end statement shows a lump total of $15,000, you would calculate $15,000 divided by 3, giving you a deductible amount of $5,000. Okay, let's take a look at double time pay. If your employer is separating the pay, meaning your overtime premium line only shows the extra pay above your regular rate, then you must divide that premium amount by 2. Example, Let's say your pay statement shows an overtime premium of $20,000 for double time. $20,000 divided by 2 gives you a deductible amount of $10,000. If your pay statement shows one lump sum line for overtime instead, meaning it combines the regular pay plus the full double time premium, the IRS allows you to take 1/4 of the overtime shown on your statement. Take the total combined double time amount and divide it by 4. For example, your year-end statement shows a combined double time total of $10,000. $10,000 divided by 4 gives you a deductible amount of $2,500. If you're law enforcement, a firefighter, or a hospital employee, you might operate under a special system like a 14-day work period, or you might receive compensatory time. The deduction still applies, but you will use 1/3 of your total overtime compensation or comp time payout amount as your deduction. However, if your employer already provides a separate premium breakdown for you, then just use that amount instead. By the way, be sure to keep your own records of your overtime. That way, if you find any mistakes on your pay statement, you can let your employer know right away. Also, just so you know, tips earned during overtime hours do not qualify for the overtime deduction. However, there is a separate no tax on tips deduction. If you want to know more about that deduction, which can be up to $25,000, click the video in the upper left of the screen. All the best to you.